Happy Monday, traders. It's 8 a.m. Chicago time on the 9th of May, 2022. Thanks for joining me today on episode number 2229. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Quick mic check, please. We're going to just take a look at the overall picture here. What we have is a risk-off market, risk-off this morning. Pretty much red across the board. Looking at the heat map, here you go. This is the pre-market heat map. Looks like kind of a Christmas, although there's very little green, no green at all. But it's looking like we're coming into a market that is going to have a hard time, is having a hard time bidding up prices. We are below the last swing low in the S&P. We're certainly showing all the signs of weakness. So, what have we got? Yields continue to steepen. Yields continue to steepen. China COVID lockdown is the highest risk of outstanding currently to earnings. Many companies have guided or have commented on this. This is a major factor right now. I mean, you heard Adidas last week and others saying that the way China's handling COVID, the COVID numbers, is really putting a constraint on earnings. That continues. Yields, of course, that story continues. And then also there's just no end in sight for the Ukraine conflict. Apparently, negotiations are still going on, but there's just no end there. And that's putting a strain on commodities. Both Ukraine and Russia are heavy commodity exporters. And then this week we have quite a few releases. This morning we have balance of trade out of China, which was forecast at 53 billion, came in at 51.12 billion as expected. I mean, it's really, again, it's this lockdown that's pretty crazy, actually. Exports out of China came in at 3.9% versus 4.0% expected. Imports came in at 0 versus negative 3%. Fed's Bostic released some comments this morning. But for the rest of the week, looking at the key figures, tomorrow we get the ZOO Economic Sentiment Index out of Germany at 5 a.m. Eastern. We get the inflation rate year on year for April out of China at 9:30 p.m. Eastern. That's Tuesday. Wednesday is a big day. Wednesday, we're looking for the inflation rate year on year for April at 8:30 Eastern. Core inflation at the same time. This is really the big release right now, is that inflation rate. Inflation rate's expected. The prior is at 8.5%. Core at 6.5% net. Several analysts and forecasts say that this may be the top of inflation for the prior month. That was March. The expectation on Wednesday for inflation year on year for April is 8.2%, expecting it to cool off a little bit. So that might be a big day, as big as FOMC, if this number comes in way off. So the rest of the week, we have GDP out of Great Britain. We have PPI out of the U.S. on Thursday, and when we have Michigan sentiment prelim on Friday. That's what's on deck for the week. Today we have wholesale inventories at 10. That's the main number. It's not really a big mover. The other thing I want to point out is the rotations on this chart. I want to bring your attention to these. These have expanded from about 8 points to about 10 last week, and we finished off at 12.5 point rotations in the ES, 48.5 in the NQ, 6.5 in the RTY, which is really incredibly wide, and the YM 85 points with crude at 45, pretty stable. Crude's between 40 and 45 cents per 1 minute rotation, swing rotation. And and that's what we have. The other piece is crypto has been taking a beating here. Bitcoin and Ether falling through. I'm resuming my bearish stance. The next key area to test in Bitcoin is 28,000. Below there, 22,000 is the last support before it starts to see itself into the lower teens. So this is kind of an interesting play here. Bitcoin has always been touted as a bit of a hedge against movement and inflation and other things, and it really isn't behaving that way, although it has held up pretty well so far on a relative basis, but it's really giving it up now, down 8.75%. So let's turn our attention to the S&P. The S&P overnight's in a multi-distribution profile, heavy volume, 345,000. This is a big clue as to what to expect today. The overnight inventory is 100% short. We gapped down on the reopen yesterday and have held below Friday's settlement of 41.19 in the S&P, and the range is 68. Again, wide range, heavy volume. This is likely to be a pretty busy Monday. The point of control has shifted down to 40.38 and a quarter, way down from where we were before. The high is at 40.99 and the low is at 40.31. Pretty decent bounce off the low after the point of control shift, and the S&P is just below mid and full session mid, full session VWAP. So that's the recap. Let's take a look at what we've got in terms of the mix of things here. So I'm going to start with the market profile chart. Again, I use market profile in heavy movement during times of heavy movement, which this is. Those of you who are confused by why I'm looking at market profile versus volume profile. Volume profile, to me, is about precision. Market profile is about accuracy, but not quite precision. You're not looking for exactly how much traded at a certain location, because with market profile, for those who don't know, each one of these boxes represents a 30-minute bracket, and so this is built on 30-minute bars, and then those bars are every time it touches a price within a 30-minute bracket, you create what's called a time price opportunity. Those are shifted to the left to create a histogram, and that's what a market profile is. So it's based on the market touching a price within a time bracket, and that time bracket is 30 minutes. It's not really, as I said, it's not really precise, but it mimics where on the big picture, it mimics really what has happened. And what we've seen here is the market making multiple attempts to break higher, to push through that 43.03 half. We went to 03 half, 03, and on a FOMC day, and then we fell right off and came right back. Actually, we fell below the balance point that we've set out in the last few sessions before the FOMC. And we started to accept value below those. Quite bearish, as I talked about. The action's quite bearish. Look at Friday. Friday, look at that. It is completely balanced. It's very, very Gaussian, and it's very weak. We have the value area moving lower, lower high, lower low. The low on Friday was put in the first half hour, and then the second half hour missed the very low by a tick before rolling all the way up. And to me, this definitely looks weak. We're challenging that last key low, which is at 56 something, it's at 56, which is exactly where we're trading. Currently, we're trading right here at 56.50. This does not look like a market that is bouncing very well. So over here, we had a bit of a bounce. I didn't draw that right. So we pull down, pull back. So this is an impulse right here. This is a pullback. This is a continuation. So this is the continuation. It looks like it's correcting, but it misses by 2 ticks on the FOMC day. And here we are near lows. To me, this looks like an additional continuation to the downside. And again, the target down below that I've been talking about is 4016. 4016 is the next key area to test. It is the current support stock zone. We'll look at that in a minute. So that's what's been going on. If we look at the price action, now let's look at, this is a day session in blue. The profile, this is a volume profile in blue using tick data, and the overnight session in orange. Okay, so if we look at the price action, we see that Friday, holy cow, look at that. That is just a mess of 30-minute bars. Very, very rough trade on Friday. And then we open up in a gap down here. We push immediately. We try to pull back and we push again. And there we are pushing against the full session VWAP, full session mid from below. We just tested the low of Friday at 40.62. We missed it by 1 tick. We missed it by 1 tick. This low here, this is looking relatively weak. Well below the settlement of Friday. To me, this looks like it has not found its buyers. And so we're also moving away from the current point of control, which is 41.50. 41.50. We're staying below that, and we're accepting prices below that. So to me, I haven't seen anything here yet that says that buyers may be making some gains. So to me, I remain on the negative side. Looking at relative delta this morning, oops, went too far. It's reloading. Looking at relative delta, so this is the session that we're in right here. Looking at relative delta, you could see that on Friday, small lots were buyers, and the delta moved with them. But this morning, very little interaction from the very large lots. These are 100 lots plus. Very little action. And overall, the delta is negative with price. This is another, you have to be careful using delta, but this is another indication of how things are shaping up. Here's what things look like. Today, there's the open, the gap. It really tries to make an attempt. The levels that you see here were done yesterday afternoon. You could see that it could not get through the 4100 century, pushes down, pulls back, and then from there, it's just not able to. It's not able to hold higher prices. And to me, this just looks like it is struggling. So it might push back up to the 4080, which I mentioned on Friday. 4080 was one of the key figures to test on Friday. If you look at that video, a 4080 is likely to shut the door. If we do push higher, if we do have some responsive buying on the open, I'm expecting 4080 to be resistance here. If not, 4100. Once it gets above the 4100, then we're looking at getting back up into this 41.18.15 area. If it takes that out, then it's likely to be a short squeeze back into the prior high a day, which was at 41.53. So this is how things are shaping up currently. But right now, as of right now, not seeing a strong potential for buyers taking over. Looks like we're squeezing through. We're squeezing through to the upside. Let's look at the order flow chart. Look at this. Look at this bar. Very strong delta. See that? This bar right here. Very strong delta on this move. Very strong delta. This looks like news to me. Yeah, this looks like news to me, but who knows? Let's pay attention and let's see what happens on the open. Looking in our review segment, just looking at what Friday did. Friday, as I said, really opened up in an open auction in range. We opened against the prior day's range on the lower end. We fell right through, and we had a really beautiful mid test right there. That blue line is the mid, RTH mid. Pulls back for a higher low, sets up a higher low reversal right here. And that was a pretty decent push higher. It stalled out at the open at 41.16 in the 41.16 area and fell back through. Friday was very jacked up. I think Friday was a day where you could get a lot of reverse signals, opposing signals. There were several instances on Friday where I'd put on a trade, and I don't manage trades when I'm in them because I'm aware that, you know, the inner idiot comes out after the trade is on, so I don't do that. But as soon as I put on a trade, I start to see that actually the opposite idea is probably stronger. It's one of those days. When I get those days, I generally tell myself to just lay off the mouse quite a bit. Friday tested the prior point of control and fell right through, and it remained in balance for the rest of the session. It's a big, Friday's close was a big nothing burger. There was nothing to feed on the close on Friday. It really didn't go anywhere. The point of control ended up in the middle of the range, inside of the IB. We finished basically in the middle of the range. Friday was a normal variation day, and we did close we did get to the prior settle, prior close, and touch the prior point of control. So we accomplished something on Friday, but overall, I did not find the trade to be very attractive or interesting. There was a lot of movement, a lot of rotations, a lot of point and figure bars, but there was also a lot of noise, and it was very conducive to just over trading and getting chopped up. Here's where we are today. I looked at this before. This is the point where we want to get back. Okay, so the balance point is right back here, 41.20. 41.20, this is the attractive point. So if we can get through the overnight high, 41.20 becomes the key target. That's a trade for me. That's a scenario 2 trade for me, that if we start to push through, well, we'd be back in the range. We're trying to get back into the range right now. We'd be back in the range, and then there's quite a bit of resistance on the way up. As I mentioned, the 40.80, 40.99, 4100. Once it gets through the 4100, I'm going to look for a pullback, and the target is 4120. The 4120 area is where I'm looking to take a ride to. Gives me about a 15 to 18 point target with about a 4-point stop, giving me good R factor and a way to profit on that trade if it does materialize. My job is to wait to see if it does materialize. Let's take a look at what's expected for today. Let's set up the chart here. Stock zones on, master levels on. And let's show. So remember from your convergent trading pre-market summary sheet, by the way, you can find that on Twitter by going to twitter.com/conv, C-O-N-V, trading. It shows a 62.5 point range. And so as I'm showing this chart here, I'm kind of looking above as much as possible, but also below. Let me center this a little bit. Why isn't this centering? There we go. I'm centering this above and below, and we have to be prepared for about 60, 65 points of range. The primary scenario here for today, the primary expectation is open auction. That's could be in range, could be out of range. We are right against that prior low at 62. We've just fallen off. We're back at 59. We're teetering on the edge. I'm looking for this thing to be responsive a little bit. I'm looking for it to battle 80 if it gets there. I'm looking for it to fail back, move to the overnight point of control, give us the overnight point of control stat, and then to start working itself down to 40.16. That's the key support. That is only the The 80 to 16 gives us the 60 points. Might poke through and come back in a little bit, but I'm expecting that once it falls, it's likely to have a pretty choppy, kind of grindy drop, pretty challenging drop. We've come a long way. We've sold off a long way, and we have this key area below us. The secondary is an open auction that attempts to move lower, finds support, impulses back to the open, consolidates, and that's where we start to challenge the 99. We get our overnight stat from the 99. We challenge the 4100. On the pullback, I'm looking to get long for a continuation to 4120. So we are at 4057, 4060, 4120. Again, 60 points. 60 points is where I'd expect it to shut off. So 40, 4120 to the upside. That would be scenario 2. Those are the two main ideas for today. Given the amount of volume that has come through overnight, so we're at 359,000, which is quite a bit higher than the 223 expected. Given the amount of volume, given the range that we've had, I expect this to be a relatively busy morning. So turn off the distractions and wait for the market to set up for the first 15, 20 minutes. Let all the equities, start to trade, and let it pick a direction, and then start to look for your setups to commit. That's my approach. Good luck today. Good luck for the rest of the week. I'll catch you tomorrow morning. Take care.